All right, guys, today is Sunday, April 6th, and this is actually going to be I think, a very interesting and, well, both interesting and important video because, after what we had last week, I mean, it's been a wild week for not just, FX pairs, USD pairs, Euro pairs, it's especially the stock market, but we're going to take a look from a technical analysis point of view and something that kind of uh, was brought to light to me when I started doing a little bit deeper analysis over the weekend and just seeing, what's going on, right? Where we're headed, with all this volatility and all these tariffs talks, talk of recessions, which me personally, I feel like we're already in one. I mean, we've been in one. It's just the media kind of downplays it for a while, not to cause any investor panic and show optimism. But if if you've been following what's been going on for the last couple of years, things are just not well, if to put it lightly. But anyway, let's let's take a look. And then first, I'm going to start with the Euro USD here. That I had my positions, that I had what I'm doing with my positions, my outlooks, and my adjustments that I've been making. Now, last week, I was talking about being short here on the Euro USD. I had an average price just a bit above, below 1.09. And once we started trading a little below 1.08, I figured that was going to that's a good indication that we might continue lower, which my target was 1.06, which was around the yearly or annual pivot area, where I thought maybe we would get a bounce down here or we were going to continue lower. Now, once we started bouncing back up and started trading around that 1.08, and we just couldn't get below that, and especially this candle here, this was the announcement. Trump came out with the announcement of the tariffs at 4 p.m. when the stock market closed, but FX pairs were still open for another hour, at least according to the daily candles. So it got a little volatile towards the end. But originally, to just backtrack just a little bit, originally this was my outlook, right? Let me I think I had, see if I had that trend line up here. I don't. Okay, so this is what I had basically. I'll redraw it. I was talking about broadening patterns. I love broadening patterns, and they always serve well for me. Just a great pattern, in my opinion. It's a little hard to spot, but when you do spot them, it sets up for a really good trade if you're a swing trader, and obviously a lot of pips. That's what we want, right? So this was my outlook right here. Okay, we had that trend line going up, and then the other trend line down here, and essentially what broadening patterns are, it's just kind of like an inverse wedge, but on the opposite direction, where the two trend lines diverge away from each other, right? And that's a show of like volatility, and the market tends to pull back into to the beginning of the pattern. So once we started getting price action over here at the 1.08, and I saw that we kind of refusing to go down, I started getting a little worried. And then we had that big bump up towards a little above 1.09. I didn't close my position yet. And then once we made this long wick, I said this could be a fake out, but just to minimize risk, because I just didn't like the way the price action was looking, I closed half of my positions, let the other half open. And then the next day we had like a 2% candle, I mean, which was insane. So I got stopped out of that one. Luckily, it was a good thing that I mitigated the risk, because it doesn't matter if I had my pip 100 pips, 150 pips. It looks like it's far away if if you're going short, but you're talking about a 2% move on the day. I mean, you're going to get stopped out unless unless your stop loss is like 300, 400 pips away. I mean, you're just going to get hit and stopped out, or worst case scenario, liquidated. So I'm out of all the Euro USD positions. Um, Ended up here with a small loss because once we made that move back up, this was just definitely like a no-go. That was it, and time to reevaluate. So this pattern here, for now, even though we did get a nice retracement on the USD on Friday, it still, it still looks like a good pattern. But then I started wondering, how come, what's going on? Something's going on because the stock market has been absolutely getting hammered, right? Which in a way was kind of expected. We'll get into that in just a little bit. But, usually when the stock market falls, the USD tends to rise. Not always, but for the most part, USD seems like a safe haven, and I expected the USD to start rising, but that hasn't been the case. The US dollar has been getting destroyed as well with the stock market. So then I started doing a little bit more analysis and looking at the weekly chart. I'm thinking, okay, something's off. Let me see if there's any other pattern or something that I'm missing. So I went to the weekly chart, and I'm actually getting a little ahead of myself because I wanted to do a little bit of daily analysis on the pound dollar and dollar yen, which we'll do in a second. But just to show you, let's see here. Okay, so then I spotted this pattern, which is, it's a weird, for me, there's no real name for it. But again, I always refer back to that book, The Encyclopedia of Chart Patterns, which was the author of Thomas Bukowski. It's just a shit ton of chart patterns that he has in there, and this is one of them. Usually what tends to happen with these patterns, and I'll draw just above here, is this. We'll just do a thick trend line here. Okay, you'll have kind of like a horizontal resistance area. Obviously, patterns are not always textbook perfect, but just to give an illustration here, what usually tends to happen is that you'll have kind of a horizontal area of resistance while the markets start making lower lows. So it's kind of like in, inverse right angled ascending triangle, if you want to say that. But this is what usually happens. Now, let me just get this brush. Price starts hitting this area of resistance, comes down, hits this area of resistance down, makes a lower low, comes around to resistance, makes a lower low, and then starts trading up really hard. And that's exactly what we started getting now. If I saw this pattern a while back, because I did go long here, if you see my other videos with the broadening pattern going down, descending, I did go long around that 1.02 area, and then I took profit at around a little above 1.06. But had I seen this earlier, I probably would have held out and held on to long positions, which would have been great. But trading is you can't hindsight, right? Can't look back and be like, oh well, I should have done this or I should have done that, right? So that does us no good. So that is pretty much what I spotted here, and things are going to look a little bit more interesting because we're going to come back to the Euro USD. We'll go to the pound dollar, and again, same thing. I had that broadening pattern again. Let me redraw it. Going out like this. Okay, starts narrow, starts expanding, and then usually we get a bump and then a move down, at least 50% of this move. Now this one's a little tricky because it did make that huge run up, but then we had this huge red candle on Friday. This might be a trap though, because this candle here might indicate or show or give the perception to some traders that, oh, we're going to start going down now, and this is going to be it. We're going to go further lower down. but it still kind of held this support here at this area. So I would not be surprised to see something bounce from here, even though we had this monster candle here. So this is something to watch. If we start trading below it, okay, maybe we're going to make a move down, but I would watch this area right here, especially, just to give it some room. Let's just make it even at 1.0, let's say 2850, that area right there. So if we can't get below this, this will be an area to watch to see if we start trading down. If we start going significantly lower, then okay. But I would watch this area first. But anyway, I had a small short position, and I said 1.03 was my cutoff point. Which if we start trading close to there, I'm not gonna like it, and I'm gonna close it. And that's exactly what I did. I just didn't like it, and I said, "Hey, this doesn't make sense to me," And this was right before this big move, so I didn't have to really set a stop loss on this one. It was a small position, and I ended up closing it before this major move up. So that's that. So pound dollar is completely closed. I don't have anything on pound dollar right now, but we'll come back to it in just a second. Dollar yen had another broadening pattern that I was watching. Okay, again, we start narrow at the top and start diverging away from each other. This looked good to me. We were, we had a little bit of divergence here, and we did make a nice run up to this area. And I think I said 151, but I was looking for maybe 152, even 153. But again, once those tariff talks came out, it was a big move to the downside, and we did get a little bit of a rebound, but we're hitting some resistance here. So don't know if we're going to, this one for me is just, we made a lower low than this. It's a little suspect for me. Again, a little curious why the USD was just getting destroyed while the stock market was falling really hard. So this would have not worked out, or at least it would have been a break even for me. But I wasn't involved in this one. But this one, after this monster candle, that was just like, a no-go. So that left me with the question, like, okay, what are we going to, what's going on here? Why is the stock market falling? USD is falling as well, not showing any type of strength. So we're going to go back to the Euro USD really quick. And I'm going to show you something that I've been watching for maybe about 2 years. Okay, let's hide this. We're going to go to a monthly chart. Now, take a look at this real quick. I've been watching this wedge take place over time. Now, this is a monthly chart, but just for the sake to make it look a little bit cleaner, we're going to go to a quarterly chart, otherwise known as a 3-month chart, right? Every candle represents 3 months or a quarter, so it just looks a bit clean. But take a look at this. We've been diverging down, and I've been watching this for probably about 2 years. I first spotted this about 2023, maybe the end of 2022, but definitely 23 and 24. I've been watching this, and you can see how it got a little bit of up and down here. And I'm just saying, okay, maybe we're going to make one more move down or somewhere down here, and that's part of a little greedy side of me where I wanted the market to come down lower so that I can buy it up as much as possible for a potential move all the way up. But yeah, this is something I'm looking at, and I'm saying, is this the move? Is this the one that I've been watching? Is this the big one that we are, that we're in the middle of, that's taking place right now? If the U.S. dollar keeps falling the way it does, and who knows what comes out with tariffs, what the Federal Reserve does, there's interest rates, there's tariffs, the economy, the recession, inflation, all these economic factors could really push the USD lower, right? We're talking about stagflation, but if this is true, then I think that the US dollar is going to continue to get hammered, and obviously it's not going to be good news. But we're talking about a run up to 1.2, maybe 1.250, if that is the case. So Yeah, this is a very pattern, important pattern here. So if we look below, I don't really see divergence other than on the MACD. There's a slight divergence going up right here, and this is why I've been keeping an eye on it, because you don't know when this. It's such a long-term perspective that you don't know exactly the right time to buy unless you're a position holder and you're going to buy all the way from here. You're going to hold for years. Don't think that's efficient for somebody like me who's a swing trader, but you're talking about a move that could be, again, well underway. So if this plays out, minimum we'll see the euro USD at 1.2. That's hundreds and hundreds of pips away. And on top of that, you know, I don't really see any divergence RSI, but on top of that, you have to consider what's going on and also this pattern that's bullish. This is a bullish pattern any way you slice it. So right now, I do have a long position on the euro USD. Right, I know I forgot I said before that I didn't, but I do have a small position on the euro USD that currently down about 50 pips, but my stop loss is 150 pips away because I don't want to get too invested in a position before the weekend, right? Before Monday. I want to wait and see what's going to happen in financial markets, on the stock market, and if we kind of have reciprocal tariffs going forward. So don't know what's going to happen in this environment. But again, if we start heading higher, don't be surprised if we start trading all the way to minimum 1.02. That's because basically that's what I'm seeing here, and that's what could be taking place right now. So that's a big one. Pound dollar, it has the same thing. If I zoom out, and I'll just put these trend lines back on. Did I remove it? No. Okay. The pound dollar one is a little bit more interesting to me because this is obviously a wedge, a falling wedge, no doubt about it. But it looks like we broke out of that wedge, pulled back onto that upper trend line, and now it looks like we might continue higher. So 1.4 is on the radar, maybe a little higher if we take our rule of thumb, which is we take the whole pattern and use a Fibonacci retracement. Let's see, we'll use right here all Fibonacci levels. Already found resistance here at the 27% retracement. If we continue higher, 1.4, maybe close to 1.5. This could go on a big run. Again, the USD keeps getting hammered. I would not be surprised to see this. Okay, so you have to remember this is a long-term chart, long-term perspective. But if we're looking for a trend, the trend could be this could be the beginning of the trend going higher and the USD going lower. So it looks, based on this, it looks like we already broke out and we're testing support, and now we're bouncing back up. If I go to a monthly, you can see it here. We had a nice run up, a deep pullback. Well, not deep pullback based on the time frame you're looking at, but we started bouncing already. So this could be the beginning of a move up higher, at least to 1.4, which is the area of resistance. You see it here, over here in 2018, and then you see it again at 2021. So be mindful of these patterns, man, because this could be a great opportunity to ride the wave to the upside on the long side. So that's your USD and pound dollar. Now again, I want to go back to broadening patterns, USD yen. So USD yen, I couldn't really identify any long-term patterns back here. But if I put the trend lines on that I had, which I'm hiding for a second, just give me 1 second to put them back on. This explains a lot. So you have this broadening pattern here, and I should have seen this. Well, I did see it about a year ago. But again, when you have a long-term perspective, you're not really keeping tabs on it because the time frame is so long, and you're looking more on the opportunities on the daily chart, right? Because you're gonna get a lot of fluctuation in between these candles. But this is 100% for me as of right now bearish. If we take a look at the MACD and the RSI, we have divergence or bearish divergence going all the way back to last year, 2024, and started making that move down, a little bounce up, and now it looks like we're about to break this. Okay, this you again, your U.S. dollar is just not looking good, not looking good for the USD. And just to give you an example of these broadening patterns, I'm going to switch a little bit to the ETFs and what I've been looking at, and what well, I don't have any positions now, but on ETFs I did have put options that did pretty well on TQQQ and QQQE, which are both ETFs. But I just want to show you what happened with this broadening pattern, right? That's for the FX pairs. If I switch over to the ETFs that I'm watching, I'll give you an example of SOXL. Take a look at SOXL. Now, if you remember, I actually had a long on SOXL back up close to 30, right? The price of 30, and on the shorter time frame, on the daily chart, I was trying to look for a bump up to 40, didn't get it, but right before this huge drop here, I got out because I saw this on the monthly chart. I said this boarding pattern looks definitely bearish, and look what happened. It went all the way from 30 where it was. We're trading at $8 right now. It's just huge, and it looks like this can actually go lower. So if I switch back to dollar yen, you can see it kind of has the same formation, and this could really open up the gates to the downside aggressively. So you have to watch what happens with the dollar yen, which 100% looks very bearish right now. So SOXL, I'm not involved in this one, but I am keeping an eye, maybe some bounce up, but I'm not looking to buy anything right now in the stock market, considering that it's just getting absolutely obliterated right now. All these patterns here, the writing was on the wall for all these patterns that I already had drawn up for maybe like 2 or 3 months back. You had the divergence, you had the spillover. TQQQ, same thing. You had that broadening pattern with the divergence, and it just took a massive hit for the past 2-3 weeks. It's just crazy how deep it has gone. But again, you can't be surprised if you look at the chart patterns ahead of time and you can see these markers and position yourself, right? Nothing's going to be 100%, but once you can identify these long-term patterns, you can kind of get an idea, or at least mitigate your risk to the potential fallout, which what we had here. So TQQQ, I had put options. I got out a little too early. I wish I would have held on for a little bit more downside, but it is what it is right now. UPRO, same thing. Massive move to the downside out of this wedge. QLD, another one. Massive move to the downside. The Magnificent Seven. You can see what happened to the Magnificent Seven. It's not so magnificent right now. You can see the broadening pattern and just got crushed to the downside. Once the funny thing is that once around this trend line here, people saw this this support with these lower candles. They were like, well, this is bullish. Now, this is why I love this pattern so much, because it deceives so many thinking that there's support here. But once you start connecting the trend lines diverging away from each other, and you understand that the broadening patterns, even though it looks bullish, it's not the case. And that's exactly what we got here. Just a devastating move to the downside last week. All the drop all the way at 41. Could go a little lower to 40, maybe even 30s, and we'll have to see what happens here. But yeah, that got destroyed. QQQE is one I had put options on. I think I bought some put options once we were around 89. So did well on this one. But once again, the writing was on the wall. You saw the pattern, and then down here, the MACD and the RSI was showing negative bearish divergence. I mean, this was a no-brainer to get short on this one. But you can see that this move is so aggressive that we might still have some downside. This is a weekly chart. If I go up to a monthly chart, look at this. It's not as clean, but there's potential there for a further downside, no doubt about it. Is the Federal Reserve going to step in, or is going to be some buying on the back end that we don't see and then bounces back up? possibly. But again, I talked about mitigating risk and see, doesn't look so good right now. That's for sure. Another one I was looking at that was actually pretty cool was the Direction. I don't know how you pronounce it. Direction, daily 20-year Treasury bull. This is a huge bull pattern that I was checking out for a while, and we were down by 42, between 42 and 45. I was talking about buying here and for a potential move up. So huge broadening pattern, also with kind of like a descending triangle, which is bullish. And if you look down below, you see the divergence going up, which gives a further case for bullishness. So far, it's bounced up about, I don't know, 8%, almost 10%. But so far, so good on this one. It looks like it could still has a lot to run to the upside if this is going to play out. So that's pretty much it for all the ETFs, FX pairs. You know what? Let's take a look at DXY real quick. Now, if we go down to the monthly, it has a bit of a broadening pattern here. And if things get ugly, then, obviously we're going to see the US dollar get further hit to the downside. But yeah, it just doesn't look good right now for the USD and the US economy. It's not something that I'm too bullish on right now. But just to dive back quickly to the daily chart on the Euro USD, I want to see this area hold, especially since we have the pivots. It found support, a little bit of support, at least for now, resistance 1. And of course, there was a pretty previous resistance here. So if we start getting aggressive move back to the upside, then that'll be great. If we start dripping lower, then I'm going to watch again that 1.08 area to see what we get here. But that's going to be it, and it should be an interesting week. I expect more volatility, more reciprocal tariffs. Maybe a deal gets worked out. Who knows? But right now, it doesn't look so bullish for the USD, and for the stock market. It's just I expect a lot more volatile. Oh, just one more thing. I want to take a look at something else I was watching. NVIDIA. This is quick, and that'll be it for this video. NVIDIA is another one that I've been watching. And if I go to a weekly chart, actually a monthly chart, we can take a look at this huge broadening pattern taking place right here. There is no divergence per se on the MACD. There was a little bit of divergence on the RSI. Wasn't as clean, but you know how these patterns go. And if it does play out, then, man, NVIDIA has a lot left to go to the downside. But we'll see what happens. And yeah, that's going to be it for this video. I hope you enjoyed this analysis, and keep an eye on that dollar, man. Keep your eye on that USD, and also the stock market could get a lot more violent to the downside. Might get a little dead cat bounce, but I would really watch that long-term wedge on the Euro USD to see if we're going to get that big run up and continue higher to 1.5 or 1.15, I should say, which is conveniently right around the resistance 2 area, otherwise known as R2. So I hope you enjoyed again. I hope you enjoyed this video, and we'll see what happens. As always, good luck and trade safe, and I will catch you in the next video.